Hey everyone, welcome back to the channel. So in this video, I want to cover the broad HEX market as a whole from a bigger picture point of view, try to consolidate a lot of the models we've looked at and get, again, a better understanding of what's going on in the macro, okay? And with that said, if you like this kind of quantitative analysis, make sure to leave a thumbs up. Let's get to 1,400 subscribers. You guys have been killing it with the subs. And let's go ahead and dive right into what we're going to talk about, okay? So I did something that I probably should have done a couple days ago, but here we go. If you consider that we've been in a mini bear subcycle from here to here, and again, in prior videos, we talked about these 100-day moving averages, and look at that. Lo and behold, we're pretty much there. But if you consider this to be a bear subcycle, a mini bear subcycle at that, because it's only really been, like 20 days. But again, these subcycles are very micro cycles. If you look at the longest one over here, 55 days, and the shortest one, 20 days over here. So you know that our dips, our major dips, can take anywhere from 20 to 60 days, and you see this white dotted sort of average dip to be a little over 50%, right? So if you're left with 45% of your value, that's like a 55% dip. And this current yellow curve is where we are now. So we've reached pretty much the shortest dip length we've had, which is our post-launch dump. Obviously, we've never seen a dip this harsh, and I don't think we really ever will, to be quite honest. But we've pretty much reached this length. Now, if we were to continue on and have our average dip of 55% or so, that would put us at around the 1 penny region, okay? And will we go there? I have no clue, right? Let's actually take a look at the chart. So a 55% dip from the top of our local peak. So from our local peak, let's say we were to have, 55% dip. And on average, it takes us 34 days. Like that, I got it almost spot on. So 34 days, 33 days or so, 55% dip. Again, that would put us at around 1 penny or so. So do I think it's likely? I mean, it could, right? But think about it. That would still be a higher low than we had prior. So even in that case, you still have a bullish case, right? I mean, you could hold on to your perma bull forever, right? But I'm just trying to point out the fact that we could be, this could be a mini bear subcycle. We could still have some ways to go. Or if you like to subscribe to the analysis I made in a prior video with 100-day moving averages, we saw that we had these regions, right, of consolidation once price hit them, and sort of had a choppiness, low volatility reaccumulation zone. So we covered the fact that we could be looking at something similar, maybe some chop around this region. And this also aligns with the idea of, hey, the 137 region or so could be support, which I actually haven't changed these since the last videos. So you can tell that we've kind of been holding support. So again, we could see something like this, some reaccumulation, and then maybe going back up and finishing our bull flag here. But again, anything can happen, really. Just trying to look at multiple angles, okay? So we saw that we could reach, if we were to do a typical dip, we could be reaching the 1 penny region or so. You see that with this analysis, we could be reaching the 1.24 to 1.34 penny region. If you subscribe to the bull flag idea, maybe this right now is the bottom, this 137 region, which we've actually mentioned in prior videos, and we can kind of wicked off of it today. Not only that, our regression support, right, on this line, this exponential curve that we've never broken, right? And so there are multiple angles you could look at these things through, multiple lenses you could look at these things through, and gather your own, arrive at your own conclusions, right? I'm stuttering over my own words, but if we take a look at some other models too, this one's kind of interesting, the moving ROI, okay? Notice this sharp dip here. This is pretty much because of the Godwill that you guys call him, coming in and pumping up the price, right? And then us having our rally that, never took us back down to those prices. So I'm talking about over here. And I'm talking about over here. So it looks like it's been over a year. So if you think about it, once we reach, May 6th to May 12th, and if, say, we were at similar regions by May 6th through May 12th, where we are now, like the 1.37 penny region, then this running ROI, this moving ROI, would reach a 2x, right? So this pink curve would pretty much come down all the way here. Okay, it pretty much implies, hey, this is when coins started becoming really, really more expensive, and so your ROI, if you had bought just a year ago, would be less because this is a moving ROI, right? So you're moving along with the past price, if that makes any sense. But you can still see that even if you had bought a year ago, so April 27th, right? Where was our chart? Here. April 27th or so. You're still up about 5x, right? And none of this is considering interest at all. None of my models really have ever even touched on interest. So those are a little more complicated to make. I'm sure they can be done, obviously. Maybe that should be a future goal for this channel. But yeah, let's continue on with this. You see that even the 6-month guys are doing better than the 3-month, and the 6-month guys are doing much better than, the people who are just in for a month, and obviously the people who are in for a year are doing better than everyone. So let's continue on looking at some of these models. The one I found most interesting, to be quite honest with you, is this one over here. And let's actually look at it on its own sheet, right? So this is the ROI since day one comparing HEX to Bitcoin. Okay, and we've looked at this model before. Let's go ahead and zoom out a tiny bit. We've looked at this model before, and we've noted interesting highlights, right? I'll leave a link here if you haven't checked that out. So tap somewhere around the screen. What I found interesting here is that it's different but same, right? Like you see this level of underperformance, obviously, over here, where Bitcoin had a huge bubble, peaked out around $30, came back down to $2, but where we are now is pretty much right on it. Right, so if we were to continue following Bitcoin, which, I mean, we're following it now, we're hugging the curve nicely, then you guys have seen the predictions, right? It'd pretty much be an easy 2-3x from here, maybe a small correction, and then just off to the races and never seeing prices like this again. So, I mean, maybe this isn't the most fair analysis because we live in different times. Obviously, they launched at different points of market cycles, and everything's just different, right? But one more chart I wanted to look at was actually the HEX Ethereum chart, because Ethereum has been absolutely crushing it, right? Look at that. 7-day predictionomics, 3K. Wouldn't that be nice? So let's look at the HEX ETH pair. HEX ETH valuation. And look at that. You could consider this to be exponential support. I actually haven't done the HEX ETH chart, right? I haven't done any real quantitative analysis on the HEX ETH chart, which would be some more interesting ideas. But yeah, you can see we're holding exponential support, and this has been historical horizontal support as well. If you take a look at these levels that we've reached in the past and have bounced from and have had bubbles from in the past. So could we be back into a reaccumulation zone like we've seen a few times? Potentially. These have been, in the past year, these were great times to take advantage of upcoming bubbles, right? So could we be in another one now where reaccumulation zone, blow off top, bubble against Ethereum, reaccumulation zone, blow off top, bubble against Ethereum, reaccumulation zone? Again, kind of a smaller bubble, but at the end of the day, we are still forming a higher low than we were back here. So if we get rid of all of this and just clean things up a bit, maybe even look at the weekly chart, then you can see that we are forming higher lows, right? So as long as we can hold, I would say, this region or so, I would remain bullish, right? If we start breaking down beneath it, well, then that's a different story. It would be more undervalued than it has been for a long, long time, and we would go on from there. So things are getting kind of bearish, right? You can probably hear it in my voice. You could probably feel it if you're like really just balls deep in HEX, right? But I just wanted to kind of give you guys a broader understanding of what could be going on. We could be in another mini bear subcycle. There are still plenty of bullish indicators, in my opinion, ranging from, we are in a historical high volume zone where we reach peak volume, and I actually saw that. We're taking a look at all angles in this video. Let's look at the volume oscillator. Someone in the community pointed out this chart, thought it was really interesting because it pretty much looks at sort of like a VPVR, right? A volume profile indicator, where it tells you when did you have peak volume, essentially. And if you look at this peak in volume, last October, it was around the 1.4 penny region. This peak in volume in January, candles were closing above around 136 or so. And so we're in that region right now of historical high volume, where, again, it's a critical point that used to be a resistance, and if we hold it as support, I think it's super bullish. Let's take a look as well. I forgot to bring this one up, is our 20-week moving average. So the 20-week moving average is historically a line in the sand between whether you're in a bullish market or you're in a bearish market. And so right now we are, we've been holding above it ever since December. Pretty much we've been holding above it on the HEX price. And right now it's between 1.16 and 1.21 pennies. So if we were to land there, I would suspect a lot of bulls would come out and start loading up their bags. Prior times we have dipped beneath them, closed candles beneath them, and historically speaking, these were the best times to buy for obviously the next 6-9 months, almost a year, right? And so, if you'd bought in these regions over here, make it a bit clearer. When we dip beneath, great time to buy. Even over here when we bounced off of it, historically have been great times to buy. That looks super ugly, but you get what I'm saying, right? That over here it could be, and this coincides, right? If this were to be historically a great time to buy, let's say we reached it or even maybe a little beneath it, this coincides with over here, our 100-day, obviously, because the 20-week is like 140-day moving average, so they're close. Not only that, obviously we're holding our exponential support on the HEX ETH pair. So a lot of stuff going on, you guys. A lot of stuff going on. One more thing I wanted to point out was trying to understand how HEX reacts when ETH is moving up. It really got me thinking, like, what does it actually do? And I wanted to look back. And what I found kind of interesting is, check this out over here. So this white curve over here is Ethereum, and obviously as you move the timeline, it really distinguishes pretty much who performed better over what period of time. You can see it moving, right? They're, depending on when you got in and if you're still holding, which one's the best in terms of return on investment. So notice that when, I'll stop moving it around so much here. Notice that when Ethereum, this white curve over here, let's take a look over here. When it started moving up and then consolidating, what happened on HEX was a short-term bubble and then reaccumulation zone, right? And then bullish formation into the end of Ethereum's reaccumulation. And then again, similar thing happened as Ethereum starts moving up again, just like over here. We have a short-term bubble, back down, reaccumulation during Ethereum's reaccumulation, if that makes sense. And then similar things happen, right? Ethereum tears. What does HEX do? It has a short-term bubble, back down into reaccumulation. And so you see this pattern where every time Ethereum kind of does a tear, and you saw it here recently too, March 24th. Ethereum tears, and what does HEX do? Short-term bubble, come back down, maybe a reaccumulation. So when you see results like, oh, the HEX and Ethereum price charts are 72% correlated or something like that. Why isn't it 100%? Well, part of it is due to this offset, right? Because they're moving up together, so to speak, but not together. But rather there's, money moves between markets, and some money moves from one market to another market and back and forth. And you can see kind of what happens here, that there's sort of a consistent, not predictable, but there's a pattern to what's going on. If you caught on to, if you were able to follow with what I was explaining, where you have Ethereum have, uptrend consolidation, what happens on HEX, bubble, bottoming, reaccumulation. Again, Ethereum going up here, you have HEX having a short-term bubble, bottoming, reaccumulation, and so on. Bubble, bottoming, accumulation, bubble, bottoming, accumulation, as Ethereum is pretty much just moving up. So would it now be a good time to flip your Ethereum into HEX? Maybe we could see something similar happen. So if you're holding Ethereum, again, not financial advice, but I would consider this pattern where what we could see is something like we've seen in the past, and it converges with a lot of models we have as well, where we could see reaccumulation, right, as Ethereum sees reaccumulation, and then have a short-term bubble on HEX, right, and maybe have it pop while Ethereum just keeps tearing. So a bunch of different angles we could look at the charts through. Let's go ahead and hide this, because there was one more I wanted to point out, and that is RSI. The RSI right now is pretty oversold, more oversold than we have been in the past, but in historical bottoming regions, if you look at where we've bottomed out in the past, it's been around this 30 level or so, sometimes a little above. Like, you have these divergences where the actual bottom on price is not the actual bottom on the RSI, but slightly higher. So then we can apply that kind of little level of tolerance, set over here, to where we're kind of in that region again, where this could be reaccumulation, could be bottoming zone. And again, we've never broken this exponential support, right, this line. We've definitely, or I shouldn't say that, we've broken it and we've consolidated beneath it and formed bottoming formations for about a week or so, but we've never actually decisively had like a move beneath it and form huge structure beneath it. If we were to start dipping a lot, and I'm talking about, we're getting back into the 1 penny regions beneath this, well then I would argue strongly probably at that point that that's a great time to buy, because right now obviously the trend is downwards, and we've been holding pretty much this parallel channel for a while now, ever since April 7th. So again, about 20 days or so, we've been in this parallel channel. And right now we're pretty much at the bottom of it. Okay, so longer video. If you stuck around, you are awesome. You are what makes this channel amazing. It's really you guys. Appreciate you watching. If you like this kind of content. Oh, a side note too. A lot of you guys were very helpful with my request on if you knew anyone or if you yourself was able to design websites, because I wanted to share some of these interactive charts with you guys on a website like the regression rainbow. Let's go ahead and see where we are now, right? So we dipped a little beneath it, and yeah, I wanted to host this on an actual website where you guys could see it real time, right? And back to this real quick, we've mentioned in prior videos that, if we were to dip beneath it and start forming larger market structure, well, then maybe we would add another lower regression band, just because, we've seen our reaccumulation zones drop a band, a zone, so to speak. Like right here is between orange and yellow, over here is between red and orange, so maybe it'll be between, maybe we'll make it brown or white or black or gray or something, and have this be kind of like, a lower band, where if we were to reaccumulate over here again in the future, it might be between the red one and a lower one, right? So with that said, appreciate you watching. If you made it this far, then definitely leave a thumbs up. What are you doing if you're not subscribed? I saw my analytics the other day, and like 50%, we're at that point where 50% of you watching are not subscribed. Stop lying to yourself. If you've been watching these vids, you like it, hit that subscribe, man, and I'll catch you in the next video. Peace.